Okay, good. So here is BC high. So we are looking for the consequent encroachment. That's the half of this inefficiency here between this candle,
Going at it.
low, and this candle, high of it. Use your Fibonacci over here. Here is a Fibonacci, the Fibonacci retracement. So you map from this low, this week, the low of that week, the low of that week to the high of this week. You anchor it to this week high. The blue line is our 50%. This is the, and set your own like this. That's a 50% level. We have 25% level. We have 35% level. We have 75% level. I can on it now, you will see it. You can see the first week, the first candle that delivered inside the inefficiency, reaching out for the 35% level. The 35% level. Second delivery inside the inefficiency, the body closed at the 50%. That's the consequent encroachment. That's the 50%, the blue line. Then the third delivery inside the inefficiency, reaching out for 25% level. That's how you can pyramid to know the level when we have an inefficiency like this. So if we anticipate when price is going to deliver inside it, you can pyramid with your Fibonacci to get the all the levels and know how price is reacting on them. It's all about price action. So you can off it back, then leaving only the 50%. That's what we are interested in now for now. Where the body close, you can see it. So we can anchor it exactly the same 50% line. Then you can remove it. Now here is our consequence encroachment. That's the 50% of that inefficiency. The body will tell you the narrative. You always look out for the body. The wick will do the damage. Most times you can even see the wick reaching out for this low, the BC low. But what we are interested is the body, the candle body, closing at the 50%. That's the consequent encroachment level at this half. That's what you are looking out for. Then you can target a high here. We are having a low. Here is a high before we drop, creating a lower low. This low is higher than this low. Here is lower than this low. Trading above it, that's a breakup structure. This candle now is our breaker block. We trade above it when we have a low, a high, then a lower low, something like this. Create a low here, create a high, another lower low. Price trading above this high created already is breaker, turn to breaker. That's what you are seeing here. Maybe we could have swept out a liquidity, a sell liquidity, then trade above the up close candle of the bullish. That's a bullish breaker. This candle here is a bullish breaker. You can see as we break above it, we went up. We had a manipulation, a Judas swing, that is speed of price going up. We created another high here and a low. We break above this, the up close candle. Look at this. You can see we have a fair value gap between this candle, last close candle here, up here, the other block. This is other block, last up close candle. Between the low of it and this candlestick high, we first had an inefficiency. Price created a fair value gap. Then trading across the inefficiency, creating another inefficiency up here. That we have cancelled this inefficiency, this overlapping. We call it overlapping. Overlapping inefficiency already created and creating another inefficiency. You can see this candle here at the consequent encroachment. That's where it reached out for, and it was rejected, acting as a resistance level, premium level up here. Rejected. Last up close candle, other block. The last close candle that before we break the low here. Market shifting structure. This is a market shifting structure. Where did we went to? Traded to the breaker. The breaker over here acting as a support level, discount. Trading from premium to discount, from discount to premium. This inefficiency here, there is an inefficiency. I'm coming to that. After we had a break of structure, price, you can see price created a fair value gap between this other block, last up close candle, this bullish up close candle, the low of the week. The low of the week, then the high of this bullish candle, and inefficiency. 2022 model, ICT model. Did we take out a low, a high? Yes. We took out a high created already, which is buy side liquidity before it dropped. Any displacement? Yes. This candle, market shifting structure, that shifted the market structure from buying model now to selling model, creating an inefficiency after a breaker. This candle now is a breaker block, bearish breaker. We break below it, creating a fair value gap here. This is an inefficiency. CB, Buying fair value inefficiency BC, selling if we create the inefficiency while we price is selling short is CB, that is sell side imbalance, buy side inefficiency. Then CB low. Can get a 50% between this low and this high. Hold on. Since network. Oh yeah, I hope you can hear me.
Yes.
Yeah, that it was network that was so it measure at your 50% level. That's the consequence encroachment. You see, the body taking out the last candle here. That's why we are selling. We are taking out a buy side liquidity. That's why market is selling. It's seeking for a sell side liquidity. We trade from premium here over here is premium up to discount. Here is a discount. Here we have an new week opening gap. This new week opening gap is Monday candle night December. Here we close on Friday. On every new week opening gap, because of our own time frame, is normally price normally open on Sunday evening night, our own night, because the price action was with New York time. It was with New York time, so it opens on Sunday evening or towards night. On opening price day, new week, price likely or usually tend to create a space like this. Hope you can see that space there. Are you there? Hello?
Yes.
Okay, cool. That space there between where we close on Friday and where we open on Sunday evening, but to our own time is Monday. On Monday, here becomes the high of the new week opening gap, while on Friday close becomes the low of the new week opening gap. The high, new week opening gap high. Hold on. Welcome. So the high of it is the new week opening gap high. The low of it, where we close on Friday, is the new week opening gap low. So this gap we are seeing here on opening price, on new week opening price, is called new week opening gap. In case you see something like this in your chart when you are practicing, so you annotate it as
I'm not hearing you. Hello.
you are just coming. Yeah, it's okay. I can hear you. Can you hear me now? Hope you can hear me. Sule, can you hear me?
I can hear you.
Okay, good. Let's continue.
Hello, I can't hear you.
So the gap between this is called new week opening gap. It's an inefficiency, a void too. So price will seek for it. That's why you see we are selling from premium to discount. It's acting as a discount area. So price is coming to deliver inside it. Today is already it's Friday, so it will do that before maybe let's see, or it will come and deliver here on daily chart. So here the 50%, the half of this inefficiency from the high to the low. Hold on, I think network something we cannot control the connection. Measure from the high of the opening on Monday. You anchor it, your Fibonacci, to the low of the close on Friday. Okay. Yeah. Hope you can hear me very clear.
Yes.
Okay. I just want to know if you are hearing me. Thank you for that. You can see where price is trading now. You can see how effective the CB, this CB here, the consequent encroachment of it, that's the half of it, as in the market standing as a resistance. So you are looking at the body. Remember the body, you are looking at the body where it closed. Anytime price deliver into inside an inefficiency like this, be it buy
Your mouth is
side,
not moving. Oh.
buy side liquidity, here is that's BC, CB. Once price deliver inside it, you are looking at the body to close first. It can rally up there to touch the high of it. That's called mohawk. There is normal, but you are looking at the body. The body is closing at the consequent encroachment. Closing at the consequent encroachment. That's the 50%. That's what you are looking at. The body will tell you the narrative. The wick will only do the damage. Now closing below. This candle now is acting as other block. This other block and other block here. The last up close candle taking out the highs here. Here are the highs. I've taken them out. Opportunistic buy side liquidity.
I have a question. Oh.
Okay, go ahead.
What is the displacement there?
Displacement.
Displacement.
This is the displacement.
Uh,
That's a market shifting structure. That's the meaning. A market shifting structure. Displacement.
okay.
That
And how
here
can I identify it on my own? How can I identify it on my own system?
is what I'm showing you here. This market shifting structure. Okay, let me come again. We can see price created a high here, right? Then drop. Here now is a high. Price went up, trade up, took out the high. Then we had an inefficiency here between this candle here and this candle. Then price trading across it. Price trading across this inefficiency already. The high there and the low. So we have a price balance here. This is a price balance. We created another inefficiency here. This price balance, this inefficiency, balancing this inefficiency. Then we had a displacement. This is a displacement taking out this low that we created before going up here, before price trading up here. Here is the last bearish close candle before price traded up. Then coming down, we took the out to the low. That's displacement. Do you get it now? Are you there?
Yes, I'm there.
Okay, good. Hope you are fine with that now. You are cool with your question. So let's continue.
Hello?
I believe maybe network is disturbing you. So you are looking at the candle body closing at the 50% of any inefficiency when a liquidity is taken. Here is a liquidity resting above. You can see we price took it out. We took it out there. Then the body closed. The body closed at the 50% here. That's what you'll be looking out for. Then price sailed down. That is a premium level, a resistance level. So you can go over to 4 hour here on daily. Go over to 4 hour time frame. You have seen that we are anticipating a sell side delivery. Here is the daily sell side that we like price to come and anticipating price to take out. Daily sell side liquidity. Here we have an inefficiency. That's an inefficiency here. This is a fair value gap between this candle here, low, and this bearish candle, high. There is a fair value gap. To identify a fair value gap, BC, buy side inefficiency, sell side imbalance, the high. Yeah, the low, sorry, BC, low. I prefer putting my own like this, but you can on your own choose your own way, bottom or, but I prefer let it staying at the middle, okay? So that let that not confuse you. You have your own choice to make and you annotate yours. The most important thing is acquiring the knowledge, because you have to have narrative of where price is going. Since in daily we are selling, price is selling, and we have delivered into an inefficiency and we took out a buy side liquidity in daily chart, daily time frame. We also, there is a break of structure too, a displacement deliver inside the half of it. That's order flow, partial entry to the 50% inefficiency. That's partial entry to the 50%. So we are selling. Price is seeking for a sell side liquidity. With that, you'll be able to anticipate price action with what is showing you on the chart as live. This is live chart. So the price action will determine if you will buy or sell with what is showing you that's having narrative of where price is going. Now we know that price is coming to deliver into this daily sell-side liquidity. It will start. You can go to lower time frame. This 4 hour, go 1 hour time frame. This is a daily, sorry, yeah, it's a 4 hour fair value gap. 4 hour fair value gap. We are in 1 hour now. Here in 1 hour, we have taken out a liquidity here. Here is 1 hour liquidity, sell side liquidity. While over here is the daily, the major sell side liquidity. Here is the minor sell side liquidity. You can see price action here on 4 hour fair value gap. You remember we have trade below it. We have break a support level, a discount area. Price could not break before. That is a rejection block. Went up to an inefficiency here. Here is an inefficiency between this candle low and this candle high. It's an inefficiency CB. Sell side imbalance, buy side inefficiency. We deliver inside the inefficiency. First touch was rejected. Second touch rejected. The third one, where did they started from the inefficiency from the CB, the spooling point, we break below it, below the 4 hour fair value gap. You can see it was rejected first time, second time, the third candle break below it. Now it be at if price trade at the 50% level of it, it will reject it. It's now acting as a resistance before acting as a support level. We have break below it. It's going to act as a resistance level. That's the premium level now. No more a discount area. It has been violated because you have a target here at the daily buy side liquidity. That's where price is coming to take the buy side here. Sorry, the sell side liquidity. We have old new week opening gap. This old new week opening gap. You can see it in 4 hour. You see that the gap, that's a old new week opening gap. It's like a magnet. It will attract price delivering inside it. It could be next week, not today. Today is Friday already. So price could even consolidate around after taking this low. So you could just consolidate. Last close candle. Here is an order block. So there is no way price will trade up there again. You could reach forth at the main threshold. That's the order block main threshold. This can be measured from the body where it open, where it close, the body, not the wick, the half of it. That's the order block main threshold. That's 50% of it. Mean threshold is that line there. This is our order block. Order block mean threshold. Mean threshold, that's 50%. For inefficiency, consequent encroachment, You measure from the low. If you created the inefficiency when price is selling, this is a candle that created it to the high. Where did it deliver to the 50%, to the 50% level? Same thing I'm saying, the body. You are looking at the body to close at the consequent encroachment of any inefficiency. The half of you, the consequent encroachment is acting as a major support or resistance. In a major support or resistance, price cannot go over it. It's like a wall. You cannot break through it. Like when you bounce a tennis to a wall or ceiling, a resistance, it will resist it and bounce back. Or like a floor, it will bounce back. It's like playing out here in price action. A resistance is so strong that it will reject price. So that's why it's a spooling point, rejecting price to continue its movement because we have filled it up. It was a hole, it was empty. Now price have delivered inside it and they fill it up. So price will continue. It's like breathing. When you breathe in, walking a long journey, you breathe in, then you keep breathing, keep moving, keep pushing. That's what's happened here. And it deliver at the consequent encroachment. So that is the way you see price. It's coded. You can read it and understand it. You just have to look at the price action, study what it's doing, study what it's doing. This minus sensile liquidity. Going into this, can you see my time at the right side? This 9:18. Can you see my time? Hello.
No.
At the right side of my screen.
Okay, now 18.
Yeah, 9:18. It works with the New York time. This is New York time. You can set your time here for your trading view. It works with New York time. Going into 9:30 opening price index market to 10 to 11 macro, a movement. So we like to see price delivering inside this new week opening gap, taking out this sell daily sell liquidity. That's a price movement, a time, specific time that price moves to a liquidity, to an inefficiency. So within that time, you can anticipate the price movement between 10 to 11 silver bullet. You can anticipate and make money. So let's go over to 15 minutes. Let's see what price is doing. You can see over here in 15 minutes. Here is 15 minutes start. Our 4-hour fair value gap, the low of it acting as a resistance. You can see it acting as a resistance. Here is the high of it acting as a support here. Then rejected it before we break down. We have a fair value gap over here. This is my special model, a fair value gap created inside an inefficiency. That inefficiency created inside inefficiency. You just have to wait for price to deliver inside this. Now, this is the last candle for bullish for buyers. Once you trade this side here and show me what I want to see. can sell short, but price is coming to deliver there to continue to going into 10 o'clock to 11 o'clock. That is BC. CB. Sell side imbalance, buy side inefficiency. That's the meaning. We like to see price close below this candle. I would like to see close below. Then this candle here will be other block. That will be our other block. Once you close below, that will be our other block. So this is where we are targeting daily sell side liquidity. We want to see price go. This one want to see price reach out for taking this daily sell side liquidity. You can go over to 5 minutes. Okay, it's 5 minutes. You see this candle here, this is a high. We close here, price close here, then open, close. Here is the last close candle, drop. Then before taking it out, that's a buy side liquidity have been taken. That's what the algo does. It will create a buy side liquidity, then creates a sell side liquidity too. After creating a buy side liquidity, creates a sell side liquidity, took out a buy side liquidity, then a break of structure. This is a break of structure. We have a high, a low, a higher high before taking it out. A structure like this. Creates a high, then a low, taking out the previous high, which is this. That's a buy side liquidity here. Then a displacement, market shifting structure from a sell model, from buying model to selling model. If any fair value gap here, you wait for price to deliver inside it. Then you target the high, the low, which is this low we are targeting now. So we like to see price create fair value gap here. Then this is the low we are targeting. Once you trade inside the fair value gap, it will drop, coming to take this low, which is this low here. You can see we have created it now. Can you see it?
Yes.
Yeah, that's price action. That's price action. After a displacement, wait for a fair value gap, which is this. If you can enter this movement, wait for it to do whatever it's going to do. Wait for it here. It's coming here again. If you miss this movement, don't chase price. You don't chase price. So if you didn't, if you miss this movement, wait for it to come back. It's coming back to deliver inside this inefficiency. Then here on 15 minutes CB over here. At 15 minutes CB. Price coming to this daily set side. That is 15 minutes CB. You are taking this low. Here is a low. And we have a fair value gap here. Here is a high too. Between this candle, the low of it, the bullish candle here, and this bullish candle, the high of it, we have an inefficiency here too, over here. So this should be our target too. We are in lower time frame, so it's likely to move faster. Price is likely to move faster in lower time frame, more in higher time frame. Like this candle now, you are 5 minutes chart. It's moving in five within 5 minutes. Each candle is represents 5 minutes. Each candle 5 minutes. In 1 hour, same. In daily, same. You just price action. We took out a sell side liquidity here, a minor sell side liquidity. This is a sell side liquidity. 1 hour sell side liquidity. That price taking it. If you're in a trade, if you're in a trade, you don't need to panic, or once you have to believe your marrow. Sometimes we get it wrong too, okay? But don't beat yourself up. Just part of the game. Part of the game. If you are trading, you have to engage more in meditation. Okay, you have to engage more in meditation. It will help you to calm you down. You need to stay mentally calm while trading. You don't know emotions, but always put your stop loss. Very, very important. Put your stop loss. We have an inefficiency here. Inefficiency here. Going to 930 opening price. So we like to see price run over here to take this daily sell side liquidity. Going to 930 opening price. 930 opening price. Can you hear me? Okay, good. Going to 930 opening price. We like to see price deliver here. Coming to deliver at the daily sell side liquidity. As our target 930 opening price, opening in inside an inefficiency. You can see where the price, the body, and color at a consequent encroachment. That's the week, the half of the week. We had a 20 and 25% level of the week. That's the 35% level where price delivered to. Yeah, 5 minutes. We have 1 minute. Go to 1 minute. That price action. Yeah, 1 minute. We have a buy side liquidity above. Yeah, have a liquidity above here. Breakaway gap. You have free day to deliver inside it. This 5 minutes week. 5 minutes week. 5 minutes week. 1 minute. You're having a breakaway gap. 5 minutes we have one fair value gap. 1 minute to see breakaway gap. When you see a gap like this, 1, 2, breakaway gap. Trading at the 50% of the CB, 5 minute CB. 1 minute is trading below it. You can see it trading below it. That's the 50% target here. In 1 minute, we have a, an inefficiency. We have violated it. Violated it. And you're going to be stand at going to act as inversion fair value gap. As inversion fair value gap. In 5 minutes. 5 minutes we have created this last close candle order block. First order block on opening price 9:30 opening price. Order block. Order block. This is our target. 9:30 opening price is to seek for a liquidity. That's the daily sell liquidity. That's why it's coming. Another, another block can go to 1 minute. You have a high, low, higher high. It's a breaker. Break below, creating a fair value gap. First fair value gap. First fair value gap created by 9:30. It's 1 minute. To see price deliver inside that fair value gap. Delivered inside it. Breaker. So breaker block. Breaker block 25% level. Then deliver inside the fair value gap. Consequent encroachment. Trading outside the high of the fair value gap. Close at the high. The body. And to get a 50%. That's the 50% of this inefficiency here. That's 50% of the inefficiency. This why the breaker is this. Want to see price take this. The daily sell side liquidity. Weekly. 4 hour and deliver inside here. Then deliver inside this. New week opening gap. Joy outside the fair value gap. A rejection candle inside the fair value gap this week. It's a rejection block. The price is selling, it's coming. Rejected it. So price is going to come and take this. Minutes. Having 1 hour. Have an inefficiency here resting below the new week opening gap here in 1 hour. Between where we close on Friday and open on Sunday midnight. It's a new week opening gap. New week opening gap. For our fair value gap. That's for yeah. It's excess side liquidity. We have an inefficiency here too, and also an inefficiency here. Here in 4 hour. Yes. Look at the high, the rejection candle. It's a buy side liquidity. Look it out. Other block 9:30 other block. I can take read in 1 minute. A little inefficiency. See, price action on that little inefficiency. The delivery. I say high. Buy side taking. I'll say breaker. High, low, higher high. Look out for the 75% level. As a consequent encroachment of the fair value gap. The body close below the consequent encroachment. Each are at fault at the weak 25% level quadrant. That's where the body is closed. A small volume imbalance. Yeah, volume imbalance. So volume imbalance. We're looking at price action, volume imbalance low, high, and volume imbalance low. Not, not right. So inefficiency here too. Yeah, low, high, and low. We have a volume imbalance here too. We have a high resting above here. then high. The week of this, the 50% of the week acts as a major support level, which is this week. 50% of it, the 50% of the week is also a major support level. 50%. Almost at the breaker, 50%. Breaker is a breaker block. We have high, low, higher high. Then we took at it. This is stand acting as a breaker. A small inefficiency, volume imbalance. Not to see price take this slope. Okay. Break below the consequent encroachment. The body. To cut a buy side by body. So the price you seek for the sell side below. Let's also sell side. Last word of buy side. The last word. There's a liquidity here resting above. Last word of the buy side. You see for a liquidity here. Other block. That's close candle. So want to see price trade below here. Setting for the 10 o'clock to 11 o'clock silver bullet. Hold low, resting here.